Well, hello and good afternoon, everyone, and welcome to the Wright-Patt Credit Union Finances in Focus live stream. Welcome to Wednesday, and my name is Ivy. I am a certified financial counselor and community development specialist for the credit union. I am excited about our guest, who I'm going to introduce to you officially momentarily. This is Tim, and Tim and I are going to share both a little bit about what he does in just a minute, but we want to thank you for joining us and invite you to invite others to join along. I'm actually getting ready to jump on myself. Please share. This week's Finances in Focus topic is one that we get often as a credit union. Credit unions versus banks and banks. What's the big difference? So I'm excited to be joined today by our Chief Strategy Officer, Tim Mislansky, who has a wealth of knowledge and experience in the credit union world, who is great to work with and who has graciously agreed to spend a little bit of time sharing a little bit of those similarities and differences with us. So again, I'm going to pop on first and then we will go ahead and get started. Please feel free to share this message. You may know someone who's been curious about this topic. Share. If you have a question or a comment, feel free to pop it in our post and we'll be sure to get those addressed. And I am not seeing it, but let's see if I go back out and back in. There it is. Okay. So I am going to share the stream and make sure I don't have it too loud, and we will go ahead and get started sharing as Ivy Glover. Okay.
Well, thanks for inviting me, Ivy.
Absolutely.
You asked me about a month ago to do this, and it's been on my calendar and something I've been looking forward to do for a while. So.
Awesome. Well, we are excited to have you. As I mentioned, so Tim is our Chief Strategy Officer, a little bit of a new position.
It is.
For you here at the credit union.
Today is day 15, essentially, of the new position.
So. We're in the new year, so new year, new position, right. New opportunities. Yeah. But Tim has been with us and in the credit union and finance world for quite a while. So thank you for joining us. Can you share with us a little bit about your experience with credit unions in your role?
Sure. So I always like to start at the beginning. So my earliest involvement was with the credit unions. I was born and raised up in Cleveland, Ohio, and my parents always borrowed from the local church credit union to buy their cars. So the church credit union was on a main street. They were only open a few hours a day. This was back in the late 70s, early 80s. Credit unions weren't as maybe complex and as big back in those days. But still did a lot of the same things in terms of taking care of people. And my dad would drop me off. I would walk in with the passbook, with the check. I would go in, I would see Mr. Murray. Mr. Murray would take me in, or take the book in the back, run the numbers, come back, give me a sucker, send me out. My dad would pick me up. And so that was what I knew a credit union was back in those days. But I've only really had two jobs in my life that since college, and both of them have been credit unions. So. Okay. Worked for a credit union in Southwest Ohio for about 8 years, and then almost 19 years ago, I came up here to Wright-Patt Credit Union.
Wow.
This great organization.
I knew it'd been a little while. I didn't know it was almost 19 years.
So, and during that time, had a lot of great opportunities to work with great people. We're blessed and fortunate in many ways to have so many people at the credit union who believe in what we're doing, who feel it's important, that there's value in the work we do, and I've had the opportunity to serve as Chief Lending Officer for the credit union. I've also been the president of our mortgage subsidiary, where we help Wright-Patt and credit unions across the entire country do mortgage lending. And now most recently with, again, I joke, the last 15 or so days, I've been in the Chief Strategy Officer role.
Wonderful. So, Tim, also, if you could share a little bit, you just kind of shared your historical kind of experience with credit unions, and mine is actually similar, and it's with Wright-Patt Credit Union. Growing up, my mom worked for Wright State University, and we're Daytonians natively, and so my first exposure to the credit union was similar to yours. You go in, I didn't go in with my passbook, but I went in with my parents and came out with a sucker at the Wright-Patt Credit Union on Siebenthaler, which is now a new Wright-Patt Credit Union there, but I have very early memories of going into the credit union, and specifically this one, and that whole idea of just friendliness and people helping people. Can you share a little bit, thinking about the whole people helping people, about the history of this credit union?
Of this credit union, sure. And before that, I always find it fun when I get to talk to, and we're both members.
Yes.
But get to talk to a member, and it's amazing how many members remember exactly when. I mean, some down exactly to the day.
Yes.
Now, sometimes that's because they started working for somebody on that day, and that's how they became eligible. But it's really kind of neat to hear members tell their story about how they got involved with our credit union. But,
it is.
you know, Wright-Patt Credit Union, you know, it didn't start out as this entity that had 30 or 40 member centers, all 1,000 employees. It started off small, and it was just this. It really wasn't even an idea. There was, back in the 30s, over on the area, what's now the Air Force Base, there was a gentleman who, and there's slightly different versions of the story because it was 80 years ago, and it's kind of been lost maybe in translation, but he either got sick or hurt on the job. And this was during the Depression. That was before they had disability insurance. If you didn't show up to work, you didn't get paid. And if you didn't get paid, there weren't necessarily ways to get money. To get a loan back in those days, you generally had to have money. And so this gentleman was, you know, pretty hard up, so to speak. And his coworkers decided they wanted to help him out because he had a family. And so a group of coworkers each pitched in 25 cents on a payday. And they made him a loan that was somewhere around $5. And that helped him put food on the table for his family while he couldn't work. And eventually this gentleman came back to work. And he paid back a quarter a week or something along those lines back to his coworkers. And when they got done, they were like, this is really cool.
Works. Yeah.
Now, they may not have used the words, this is really cool, back in the 30s, but they thought it was a neat concept and an interesting one. And so what they decided to do is that they would all do that. And what they did is they each put in a quarter every payday. They put it in a shoebox that they actually kept in the desk of the nurse in the machine shop over on what now is, again, the Air Force Base. And they called it the Sunshine Fund. And whenever a member or whenever, you know, a coworker had tough times or a difficult financial, they could borrow from it. And they all made the decisions together. You know, Bob wants to borrow money from us. Should we loan Bob the money? And it was all done by the members of the credit union. So that small, approximately first $5 loan made 80 some years ago has turned into this great $5 billion organization that consistently helps people. But at the end of the day, what we do today really isn't different what we did back then.
I was going to say, that's my favorite part. So I've been with the credit union as of last Friday for 9 years.
Congratulations.
Thank you.
Yeah.
It's been great. And that is the favorite part for me of what we do in each of our roles, is that when you look back at that story, we can still translate that to what it looks like today in the different things that we do. Much larger scale.
There's more zeros involved.
There's more zeros involved,
Yeah.
and probably a little more, checking the dotting I's and crossing T's, but the concept's still the same, and I think that's really great about credit unions. So a lot of people don't know that story, so thank you for sharing that, first of all, because I think that, like, when I go out, that's one of the first things that I share is that story, because I think it's so cool and how it does translate to what we do today. A lot of people don't understand that that's really different, and they also don't understand some of the other differences between credit unions and banks. Could you share a little bit about the differences?
Sure. No, I'd be glad to. But I think, again, a lot of people don't realize that because the products and services that we offer to the members, checking accounts, car loans, student loans, mortgage loans, certificates or share certificates. If you looked at the menu of products that we have as a credit union, as is Wright-Patt, they would be comparable to what most of the banks offer. So people do look at that and they're like, well, how is it really different? But there are some really important key fundamental differences.
Okay.
The first one goes back to that story, and that credit unions are, at their core, financial cooperatives. They are owned by the members. So every member who's a member of Wright-Patt Credit Union, whether they have $5 on deposit or $500,000 on deposit, is an equal member. They're all the same in our eyes, and they're all owners of the credit union. So in the bank world, and there's nothing wrong with this, it's just a different model. Banks are generally owned by stockholders, people who own the stock of the individual bank. That stock may be traded on Wall Street, it may be a privately held bank, but they're still stockholders who aren't necessarily the equivalent of the customers. And we call them members, but they're in many ways the same thing. Our members / customers own Wright-Patt Credit Union and own all credit unions. Whereas the people who go into whatever bank it might be, more than likely are owners of the institution. So that's one fundamental difference. Another one is that in the credit union world, credit unions, because they're cooperatives and because of the principles of cooperatives, they're democratically controlled. And what that means is that every member gets to vote for the board of directors. So again, regardless of the size of your relationship with the credit union or the balances, one member equals one vote for the board of directors. And we're actually going through our annual election at this point in time. I think I saw a sign that said February 12th. Election closes, so if you haven't voted yet, it's your right and privilege as a member of Wright-Patt Credit Union. You can go on our website and see how to vote for our board members.
Yeah.
Because the board members, one, are elected by the membership, and two, they come from the membership.
Which is really
so
good
they're our fellow members.
Yeah.
And then I think a third really big difference between a credit union and specifically Wright-Patt Credit Union and on the bank side has to do with, I'll call it profit motive. Credit unions are structured under either the Federal Credit Union Act that the federal government put in place in the 30s or under state law as not-for-profits.
Mm-hmm.
Now, that doesn't mean we don't try to make a profit.
Right.
We do have to earn positive revenue. You need to make sure that the money that we bring in, that members pay us through either interest rates or fees, helps us pay for all the expensive and kind of have a rainy day fund. It's a safety and soundness type issue. But that's not the primary purpose of what a credit union is. Whereas most times a bank has a profit motive of maximizing shareholder wealth. And again, those shareholders aren't necessarily the customers, they're the stockholders. And I think another way that we demonstrate that really well here at Wright-Patt Credit Union, one of the things I'm most proud of and get excited about every year we do is when we get to announce the patronage dividend.
Yes.
Because what that really is a reflection of is that credit union had a great year, we did better than we thought we were going to do, we made more money than we needed. And so we said that money belongs to the members. And so we give that back. In this past year, just 2 weeks ago, it was in excess of $10 million.
Yes. So on that note, I think we mentioned the vote. These are the kind of plugs we like to give.
Yeah.
If you haven't checked your savings account and you
Right.
know that you have been a member for the past year, because as Tim mentioned, from $5 to $500,000, your relationships with us as an owner have its benefits.
Yeah.
That patronage dividend means that you probably got some type of deposit in your account. So check your savings account. Yeah, that's also another great way.
So I've let you ask all the questions,
Yes.
and I like to ask questions too.
Okay.
So, as an employee of the credit union, a partner employee, and also as a member, what do you find unique, or what do you take the most pride in or get excited about that we do it right now?
Sure. So, wow. I get excited about it a lot. I'm very.
You are an
I
excitable
am
person.
an excitable person.
I
Most
know
people
that.
know that about me. But a couple of things. So I came from the nonprofit world, social service agency, and as soon as I stepped foot here, even from the training that we do in the first weeks,
Right.
I knew that this was a people first place. And I remember my dad asking me, Ivy, you're switching gears a little bit going into the financial industry. What is it that makes this role still match for you?
Right.
And I said, well, first of all, it's a community-oriented role, the job that I do. I said, but I feel like this organization doesn't exist for profit. It exists to help the people. The profit just comes. And that matters to me. That really matters to me. I'm born and raised in this area. And so as we serve this community, I really saw myself being able to be impactful there. And I think that I could say my fellow partner employees feel the same, that they see that the work that they do makes a difference. The other thing that I really like about the credit union and Wright-Patt specifically is we call it the 3-stakeholder model. But it's really that the way we do business here, we are always keeping in mind not only how it benefits and impacts the member, but it's also the employees, which we call our partners, and then it's also the credit union at large. That way of thinking for me has actually challenged me in other areas of my life to think a little bit differently. It's not just about what it does for you or what it does for your family even, but what's the ripple effect, if you will. And so that concept has been a very important one for me, both personally and professionally. And then you mentioned the patronage dividend. Things like that, it kind of brings the whole ownership idea full circle. You know, when business is good for everybody. And I just really think that that's a way that we walk what we talk.
Yeah.
When we say that, you know, you're the owner, you have a say, you also get to benefit from when business is thriving. So those are kind of my top threes, I guess, if you will.
Yeah, those are all great ones. And I think, we say it this way too, and I think it says the same things that what we ask everybody to do, whether it's somebody in a role like yours or a financial coach or an executive like myself, is that our job is to take care of the members, and take care of people. And if we do a better job of taking care of the people and taking care of the members will take better care of the credit union. And if the members take better care of the credit union is able to take even better care of the members and the employees. And it just becomes this amazing circle that just kind of gains steam as it rolls downhill. And that's really the cause, in my belief and many others, of why we're successful at Wright-Patt, is because we focus on the people. And as you said, the profits will come. Right.
Which we see, I heard that we're getting close to, if we haven't hit it yet, our 400,000th member.
We are.
That's, I was actually here for our 200,000th member. So that speaks to the growth we've had. We've had a lot of growth in the past 9 years. I mean, I remember the 200,000th member, and to know that we're 200,000 almost more. And again, not that we're just looking at growth, we're looking at taking care of people, but it speaks to that cycle. When you take care of the people will take care of the credit union.
And to that point too, it's always interesting when we talk about growth here. We don't talk about growth in terms of members necessarily, or in terms of assets or loans or deposits. It's so in some ways it is the members. It's the people side. Because if we help more people, what we look at is how do we spread the impact that we make across a larger group of people, because we believe that what we do here matters, like you said earlier. So it all connects.
All connects.
Yeah.
And what I hope you all can see, what's great to experience for me, even in this moment, I just kind of had this, it all connects at all levels. And I also think that's also why we appreciate you chatting, because I think that is organic within the organization. It connects at all levels, from the most chief and senior level representatives to those who serve our members every day, and those who serve us in helping us serve our members in our service positions, and whether it's maintenance, security, all of it resonates throughout the organization. I think that for me that's important, and I think that it speaks well to what our members receive as well.
I agree. I agree.
So Tim, as we close, actually I have one other question. Can you you did kind of speak about the products and solutions we offer to the members in our community. One thing you did mention in the beginning that this is somewhat of a throw-in, that a lot of times what my experience is when I'm out in the community doing things, some people don't realize the breadth of what we offer. And I know that we're very similar to banks in that we offer loans and things like that. Could you just real quick say, if you came to the credit union, you could receive services from here to here. What would that look like? How we serve the whole family. What do we do?
No, that's a great question, because we look at things about where are people in their life, and what we talk about internally as employees and staff is we're trying to find how we can solve, I call them pain points for members. Money is oftentimes a big stress for people. Too many bills, or the car breaks down, or the furnace needs replaced, or I want to send my kid to college. So regardless of what a member wants to accomplish, what we really focus on is how do we help that member live the life they want to live, is what we say. And so it starts in the beginning with the programs we have designed for around kids and how to get them to be savers and start saving money, to giving people checking accounts, or even second chance checking accounts where they've had maybe a problem in the past with it, but certainly helping people buy that first car. The one that has been passion of mine for a long time because of my involvement with the mortgage company is how we help people buy their first house. Almost 2/3 of the mortgage lending that this place does is to help people buy their first house.
Wow.
And I think that's powerful, because homeownership is it creates a sense of safety, it creates a sense of community, it creates a sense of family, and those are all things that are important to, I think, all the employees at Wright-Patt. And we offer a lot of services to try to help people better manage their debt, because unfortunately most members have some level of debt, whether it's a mortgage or a car loan, or you had to pay for something that broke, or you finance that maybe big vacation and now you're paying it back. But what we really look at is that regardless of where a member is, that we're able to help them all the way from when they first start out all the way to saving and planning for retirement through the financial services that we offer as well. And then maybe just to highlight one program that we probably don't talk enough about that I think is just kind of a neat thing we do at Wright-Patt Credit Union. And it shows how we're different. Is that regardless of the type of financial institution, whether it's a bank or a credit union, generally the larger the amounts of money you have, you may end up being able to earn more dividends. And the reason why is because you put your money, say, into certificates of deposit, and you allow the credit union or the bank to keep it longer, so they'll give you a higher rate. But at Wright-Patt Credit Union, we want to encourage people to save that first $500, kind of establish that almost emergency fund, which is important for people to have. And so what we do is we say, on your first $500, we're going to pay you 6%. And the reason we do that is because we believe it's important to save and establish savings. Now, once you get past 500, you go back to your normal rates, but this takes that democratic process within the credit union and spreads it even further, because regardless of how much money you have, every member has the opportunity to systematically save, hopefully to get to $500 and earn that 6%.
And benefit from
Right.
That is huge. Yeah. I know one statistic that just came to my mind, I think Financial Health Network shared with us a few years ago, was the whole over half of Americans don't have $400 cash saved in an emergency.
Right.
And that resonates so much with us. So to know that all members have an opportunity to earn the highest returns on $500, which you really need, is really valuable. And it's another big differentiator, because you don't hear that. You know, a lot of times you hear people talking about the big investments and the big long term. But what about that liquid savings that you just need, and the fact that we reward, if you will, or that we help our members and say thank you for them really taking that first step for their well-being. It's just great. Yes. Well, thank you, Tim. As we close, can you share a few tips that can help our listeners and identify? You've kind of done it already, right?
Yeah.
I think we know what the right financial institution looks like, but if there were any final tips that you could offer as someone's looking for one, or maybe thinking about something for their family member, what would you offer?
Well, they'll be a little bit biased maybe, but I think the first thing is that, you know, whether it's one of our members or any consumer, I mean, there are literally thousands of places they can go to do the types of things that we do here. So I think finding a financial institution, and specifically a credit union, coming from somebody who spent 30 years working for credit unions, is the relationship aspect of it. Is you want somebody who's has your back, who's there to try to help you through life, who's there to coach you and counsel you and give you advice. Because what I say to employees a lot is, so let's say for a mortgage person, remember, you do mortgages every day, 40 hours a week. Our members only buy a home probably once every 5 or 7 or 10 years. You're the expert, and we need to remember that when we talk to members and we help members. So, that relationship aspect, that community-based aspect, where the decisions and the people who you work with are local. And they're the people you see on the soccer field, at the grocery store. I mean, we hear that all the time. I know I've got a Wright-Patt shirt on today, and when I go out to lunch, I can almost guarantee you somebody will see it and say, "Oh, you work at Wright-Patt. You guys are great." Yeah. So that's a neat thing. But I think too, is a financial institution. I mentioned pain points earlier. I mean, most Americans have some sort of money worry. Whether it's, am I going to be able to retire? Can I send my kid to college? Hopefully it's not, can I pay my rent this month or my mortgage this month? But it could be, and some people do. Bad things happen. Bad financial things often happen to good people. Right. Most people want to pay their bills. There aren't a lot of people out there who are trying to just get by. So so we recognize that. So institutions that work to solve problems and solve pain points, I think, are important. I mentioned education, and I think the last thing is that, I talked about, credit unions aren't are not for profit, but they still need to make a profit, is that you deal with an institution whose every financial institution needs to charge interest rates and some fees, but that the fees and the interest rates are fair and equitable, that they're reasonable, that it doesn't border on that price gouging thing. And so I encourage all consumers that when you're out, whether you're looking at Wright-Patt for a product or service or somewhere else, is that you do some comparison shopping, that you understand. And I think, from Wright-Patt's standpoint, we feel between the rate and fee that we're going to give a member, as well as the super high quality of service that our 1,000 outstanding partner employees provide every day, is that we're that right solution for our members and for the communities that we're in. So.
Well, I like that. I think that's a good place to end this today.
Good to me.
I think you also issued a little bit of a challenge there to our viewers, that as you are being a smart consumer, to comparison shop. And I like that kind of as a closing challenge to you all, whether it be for a savings or deposit account or a loan, or buying that new item for home, that you be a smart consumer, that you be an advocate for yourself and make sure that you have the right solution for whatever the need is at that time. So.
But it's not always to get the lowest rate or the highest deposit rate, because it's more than just that. It's about things like, when I have a problem, how do I get it solved, and how are they going to help me? And so it's broader than just pick the lowest cost and an interest rate for a car loan, or pick the highest CD rate on a deposit.
That's great insight. And thank you so much.
You're welcome. Thanks for asking me to do this.
Absolutely. We will have you back, by the way, if
that
you
sounds
will have
fair.
us. Yes.
Sounds fair.
Yes. So speaking of having Tim back and more to come, we are excited to continue these Finances in Focus sessions. We thank you for those who have viewed this today. I invite you to continue to tune in. Our next session is on Thursday, January 23rd. And that session is actually going to be about keeping you encouraged on those resolutions and goals that you've set. For many of you, maybe one of your goals was to be better managers of your finances this year. Maybe one step is to take a look at the right solutions to help you do that, kind of bringing it back to what we talked about today. For some, you may just need that boost, because statistics show that somewhere around the third week of the year, folks drop off with those resolutions and goals. So that's actually why we're doing it on the 23rd. I'm hoping I can give you a little bit of cheerleading and a couple of tips to help you stick to your financial goals. But again, I just want to thank you all for tuning in today. Tim, thank you so much.
You're welcome.
I know that your day is usually full and busy, but we certainly appreciate
I've been
you
looking
sharing.
forward to doing this for a while, so appreciate it.
Yes.
Great.
Do we have a question? Oh, we're saying bye? All right.
All
So
right.
Thank you. Sorry about that.
Thank you
have
for watching.
Have a great afternoon, and have a good one. Thanks for watching.
And thanks for being members.